Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Tuesday, the 16th of November. Starting off with African Pioneer with the signs of life. We bounced off the main 2.2 pence support for the third time, basically, in the last few months. Just looking for, I suppose, a weekly close above the 200-day moving average at 3.16 pence. If we can get that, then it is up to the long-promised 5 pence area, which is the top of the rising trend channel from back in June. Obviously, we don't want to see the shares fall back below 2.2 pence anytime soon. Bit of bullish divergence in the RSI window as well, backing the idea that this time we could see the shares break to the upside with that rising momentum line there in the oscillator window. Moving along to Alpha Growth, which I think I've covered a couple of times in the recent past. Worth having a look again on rather a dull day overall. Here we've got a situation where the shares have bounced off the 50-day moving average again at 2.9 pence, and above that we're looking towards that line of resistance from July as high as 4.1 pence. Obviously that would take out the 200-day moving average at 3.85 pence, but it looks as though we've got an RSI bounce at neutral just around the 50 level, and that backs the idea of a rebound while we're above the 50-day moving average. On to Chaarat, where there's actually been some decent news today, encouraging results. What is encouraging, I suppose, also is the way that the shares have actually delivered. Well, they actually delivered an island reversal, so they gapped down at the turn of the month and then gapped up last week. While we hold above the 20 pence area, and especially while we've got that mildly bullish divergence line there from back in September, we're looking for a push towards, I suppose, the mid to upper 20s, maybe 26, 27, something like that, as soon as the end of the year. If you're cautious on the shares, obviously wait for either a break of the 50-day moving average at 22 pence or that line of resistance from April at 22 and a quarter pence. On to a stock which has been doing rather well of late in terms of being a recovery situation, C4X. Here you can see that shares have pushed up to new highs for November. They could still get up towards the 52, 53 pence area, which is the top of a broadening triangle from March. Time frame on that as soon as the end of next month, which is obviously the end of the year. Worth looking at Eurasia Mining today. Clearly a rather strong day yesterday and a pretty strong day today as well. Just trying to break yesterday's high around 30 and 3/4 pence. And if we can do that either today, tomorrow, that sort of thing, then we could head up towards the top of that rising trend channel from May as high as 40 pence, which would then give the company a market cap of over £1 billion. Moving on to Emerson, which is also in recovery mode after the directed buying that we saw yesterday. Just want to see the shares hold above the initial November resistance just below 7 pence. If we can get that on a weekly close basis, then we should head up towards the long-awaited 8.5, 9 pence area by the end of next month. Stop loss at the moment back below 6.25, the top of the gap higher that we had last week. On to an interesting situation in terms of Kefi. Not a stock that's been sort of covered itself in glory, but we do have bullish divergence here. We had a bear trap as well below the October support, so it went down to around 0.85, and then we've spiked back up again. That suggests that we could at least see the shares trade back to the bottom of the gap, the September gap at 1.3 pence, even if they fail again after that. So bear trap reversal seems to be on the cards there. On to Kavango, and here you can see that we've got a nice bear trap rebound from just below the 50-day moving average. That's currently rising at 5.2 pence and above the 50-day line, looking towards the top of that rising trend channel from back in December last year as high as 8 pence, perhaps as soon as the end of December this year. On to Okyo, which has been making decent recovery moves of late. I think we had options granted, and then we've also had a gap to the upside, which remains unfilled, which is always good news. Also, the rising 50-day moving average. Now we're looking to see whether last month's resistance at 6.75 pence can be broken on a weekly close basis. If it can, the shares could be on the road to the top of that broadening triangle from this time last year, as high as 14 pence, maybe over the next 2 to 3 months, so maybe by the end of January or around that time. Next up, we've got Toople, which I suppose is for the brave. Here we've had a break of this July resistance line there and a gap higher through it at 0045, let's call it. Want to see an end-of-day close or a weekly close back above the 50-day moving average, just above current levels. If we can get that over the next few days or this week, then there's a chance of a move to 007, which is, or 0.07 rather, which could be seen maybe by the end of next month. But just the idea here that we've got a bear trap gap reversal and the shares are finally rehabilitating themselves. Moving on to Tech Capital, where it's more of a momentum trade. We've got that rising trend channel, which has been in place since this time last year, above the 50-day moving average at 30.6 pence, looking towards the top of that channel as high as 42 pence, perhaps as soon as the end of next month. So looking pretty keen there in terms of the argument for the bulls, especially as we have a as yet unfilled gap to the upside from last month and to support coming in above that. Finishing off with a stock, I tweeted about yesterday. Just looked very oversold yesterday around the sub 70 pence area, and we've built on a rebound quite well so far. Hopefully, I suppose we'll head up towards the top of that falling trend channel at 85 pence. There's a gap down as well around 87 pence, so maybe that's a target there as a best case scenario target over the next 2 to 4 weeks. But the upside really, while we're above recent support at 66 pence and that June support line from earlier in the year. That's it from me today. More updates tomorrow.